It's been raining IPOs lately, and there's one more prominent company heading for an IPO this week, the multi-channel retail platform called Firstcry. Now, we're going to break down the company's business model, the market opportunity, their financials, and of course, their strengths and weaknesses. So stick around till the end. First up is IPO details. Firstcry will open for subscription from August 6 to August 8. The IPO includes a fresh issue of shares worth Rs 1.67 crore and an offer for sale of Rs 2.53 crores. The price range for the IPO is set between Rs 440 to 465 per share, and you can bid for a lot of 32 shares. Now, about 75% of the public offer is reserved for qualified institutional buyers, 10% for retail investors like us, and the remaining 15% for non-institutional investors. Now, coming to the objective of this IPO. The net proceeds from the fresh issue will be used to set up new stores, expand overseas, and boost their sales and marketing initiatives. Now let's talk about Firstcry's business. Now Firstcry is India's largest multi-channel retailing platform for mothers, babies, and kids products in terms of GMV, according to the company's RHP. They also have a growing presence in select international markets. They established a presence in the UAE and Saudi Arabia in 2019 and 2022 respectively. Now in India, they sell their products through an online platform, company-owned modern stores, franchisee-owned modern stores, and general trade retail distribution. They offer a wide range of products including clothing, shoes, baby accessories, nursery items, toys, personal care products, etc. Now the platform features over 1.6 million products from over 7,500 brands. Now in addition to being a shopping destination, their platform also provides access to a parenting community with relevant content about babies and children. Now, this unique content strategy on parenting is also helping them enhance customer engagement and boost sales. Now, let's dive into the market opportunity for Firstcry, especially in the Indian retail and childcare product sector. Now, first off, the Indian retail market has shown significant growth and is expected to grow significantly at a CAGR of 8 to 10% by fiscal year 29. Now, let's talk about demographics. Now, India boasts one of the highest birth rates globally with 16.3 births per 1,000 people in 2022. Now, the annual birth rate in India is about 1.5 times that of developed economies. Now, this high birth rate fuels demand for childcare products, creating a fertile ground for businesses like Firstcry. Now, currently, the spending per capita on children products in India is relatively low. However, this spending is expected to grow rapidly, outpacing mature markets. From fiscal year 24 to fiscal year 19, the spending per capita on childcare products is projected to grow at a CAGR of 13 to 15% compared to just 2 to 4% in the USA and 5 to 7% in China. Now, focusing on the childcare product market in India, which is estimated to grow at a CAGR of 12 to 14% by fiscal year 29. Now, interestingly, around 80% of the Indian retail market was still organized as of financial year 2024. Now, this presents a massive opportunity for organized retail players like Firstcry. Now, moving on to the financials. Now, Brainbase, or rather Firstcry, has consistently grown its revenue over the past few years. It recorded a revenue from operations of 6,480 crores in fiscal year 24 and is growing at an impressive CAGR of 64%. Now, the gross merchandise value, which is the total monetary value of orders, has seen a consistent rise. For fiscal year 24, it grew 18.7% to 7,582 crores. Now, the company also maintains a healthy gross margin upwards of 30% for all the years, which basically means that more than 30% of business revenue is left after subtracting direct costs such as labor and raw materials. However, with high operating costs like logistics, supply chain, and marketing expenses, this has put a strain on the EBITDA, with the margins falling to 4% in fiscal year 24. Now, with Firstcry heavily expanding its physical store network, technology infrastructure, this has impacted the company's profit levels. Now, while the top line has grown consistently, the bottom line or profitability has been a challenge. Now, the company's losses have widened and recorded 321 crores of losses in fiscal year 24. Now, another point to highlight is Firstcry's debt, which has risen significantly to Rs 462.7 crores in fiscal year 24. Now, the company is using the proceeds from its IPO to fund operations rather than to reduce debt. While this might be necessary for growth, it will also increase the financing cost, which will eat into the profits of the business. Now, lastly, the return on net worth was recorded at a negative of 8.65% in fiscal year 24. Now, the company has no listed peers, and since it's a loss-making company, we cannot calculate the P/E ratio. Now, let's dive into the company's strengths and weaknesses. Now, coming to the strengths first. Firstcry operates in a market driven by high birth rates and increased per capita spending on childcare products. Now, with a dominant share of the market still unorganized, there's significant potential for organized players like Firstcry to gain a larger share. Now, Firstcry has also a strong relationship with global brands and efficient back-end and supply chain capabilities. Now, as the largest player in the baby care segment, Firstcry also has a loyal customer base with around 72% of their GMV coming from existing customers. Now, their content on parenting also feeds into the transaction funnel and creates a strong flywheel effect, enhancing customer engagement and loyalty for the business. Now, coming to the weaknesses. The company operates in a very fragmented industry and faces stiff competition from many unorganized and organized players. Now, it also has an employee attrition rate of around 40% over the past 3 years. Now, Firstcry has also been loss-making for the last 3 years with negative cash flow from operations. This is primarily because they're focused on expansion and foraying into international markets. Now, investments in new businesses are likely to continue impacting the profits in the near term. So one must keep an eye on these losses. Having said that, this is me, Merlin Susanna, signing off. Take care and stay invested.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.